Hi everyone, in this video we're going to review how to enter the R&D tax credit into Intuit Proconnect, which is a tax filing software that we use here at Hashbasis. So first off, this is the calculation that we're going to be looking at and then inputting into the tax return. So columns E and F here have the actual R&D calculation. Now this is normally done along with section 174 expenses, but for this video we'll just be focusing on the actual credit versus the 174 intangible asset and amortizing that. That could be a whole separate video. So for this, what we've done so far is we've tallied up all of the applicable R&D expenses. So for example, wages for employees for qualified services, rental or lease of computers, so think of cloud cost, and then contractor R&D expenses as well. So across these three expenses, the total we get is 353. Now I'll link to this template in the description to this video so that you can go through and see how we're actually calculating this, because the R&D tax credit calculation is a little bit different from the section 174, even though they are related. So first off, let's just look at the expenses, 353, that is kind of the base for this credit. Now, as per the calculation, you take this base and then you essentially whittle it down by different percentages. So for our example, you have to enter a fixed base percentage. For ours, we did 3%, which is typical for new startups. Now, in this example, our startup did not have any revenue, so their annual gross receipts is 0. And so when you multiply that by 3%, you also get 0. And then you compare lines 12 and lines 9, and we can see line 9 is bigger, right? The 353. So once you take that, you multiply that by 50%, and then the full credit is taking that amount and then multiplying that by 20%. So that's the mechanics of how the actual credit calculation works. And for this example, our startup is electing to offset payroll taxes by the amount of this R&D tax credit. So overall, the R&D tax credit is $35K. Now, if we flip over to Proconnect, the question becomes, okay, how do we actually enter this? So first off, what I would recommend is just typing in 6765, which is the form for putting in the research credit. And you can see here it automatically comes up, so you can click on that. Increasing research credit, 6765, and then this will flow through another form, which is the general business credit. So it's going to show up in two places, but you want to start by entering it right here. So if we scroll down, we want to head to qualified research expenses. And so we can take what we've put in the template and port it over to Proconnect. So wages for qualified services, rental or lease cost of computer, and then the contractor research expenses. The one thing I wanted to note is that the other contract research expenses, it says in full here. And so you have to take this amount and back out the 65%. So let me explain what I mean by that. Under the R&D tax code, you essentially add up all of the expenses you've paid to U.S. contractors, multiply that by the percent of time they've spent in R&D, and then you multiply that by 65%. So you can see how this calculation works. I'm taking total amount paid times percent of time spent in R&D times the 65%. And so in Proconnect, they want you to essentially back out that 65% and enter the amount in full, and then it'll do the calculation itself on the back end. So what we want to do is take this 90,000 divided by 0.65, and so the in full contractor expenses is 139K, which is going to go right there. Fixed base percent, I said, was 3, and then average annual gross receipts for preceding 4 years, 0. Now, to elect the payroll credit, don't forget to check this box here. So it says for qualified small business, enter the portion of research credit elected as payroll tax credit. For our example, we want it all to be applied against payroll, so we're going to add a 1 here. And just a note, the IRS does have a separate definition of what a qualified small business is. So check that out and make sure that the company that you're trying to do this credit for, at least like the payroll credit, actually meets this definition. So, okay, now we have this entered here. Now we can go to refresh forms, which is going to bring up what the tax return looks like now. And if we go to 6765, we can see what this looks like. So we have wages for qualified services, rental or lease cost of computers, ties out to here. And we can see the applicable percentage of cloud or contract researchers. It's that 90,000. So Proconnect is going to do that calculation on our behalf. It's going to take that, 139K, multiply it by 65%. And so we get the correct 90,000. We have the total expenses, 353, the 3%, and then we have that calculation I mentioned, so multiplied by 50% and then multiplied by 20%. For this client, we're electing to not do the reduced credit, so we're going to check no here. And then if we scroll down, this is where the payroll tax election comes in. Now, if we head to the check return tab, we can see that there is one critical diagnostic. We can open that up and it says you must manually reduce applicable qualified research expenses deducted by 35K, so the amount of the credit we're trying to claim. On that form we just looked at. And the second part is you had to attach a schedule showing where you actually reduce the deduction amounts by the amount of the credit. So the theory behind this is that the IRS does not like double dipping, as one can imagine. And so the first part, the applicable qualified research expenses deducted, this really gets back to that Section 174 expenses I was mentioning before. For Section 174, you are capitalizing and amortizing R&D expenses over 5 or 15 years, but that does mean in the current year there is going to be some amount of those expenses that can be deducted. So if we go back to our template here and actually head over to the schedule tab, we can see how it works a little bit. So for 2023, for instance, we have this amount of Section 174 expenses, and we are spreading them out over longer periods of time. But the amortization starts in the midpoint of the taxable year. And so for 2023, we can still take some amount of those Section 174 expenses as deductions. In this case, we can take around 50K. And so that's what this is trying to get at here. You'd essentially be double dipping if you were able to take the full amount of the deductions and also take the credit, which is you're getting a dollar for dollar back from the government. So the IRS doesn't like that. So what this means is that you had to reduce those Section 174 expenses that you were able to deduct in the current year by the amount of the credit, so by the 35K. And then again, you had to upload support showing where you actually did that. Now, if we go to input return and then let's go to deductions, so we can see here what that looks like. Now, for what I've put so far, so let's say we have other deductions, and then let me actually add here Section 174. And for our purposes, we're able to deduct, let's actually add this up. Well, let's do 164, which includes current year and prior year. And so our total deductions, the other deductions, which could be like marketing, other vendor payments, salaries, etc., is the 150. And then we also have the Section 174 deductions that we are able to actually take this year. Now, what Proconnect is saying is that you have to reduce the Section 174 deductions by the amount of the credit. So what I've done is I've added a separate line here, R&D tax credit 2023, and then I've added the amount of the credit, the 35K, and then I'm just putting a negative in front, so we're essentially reducing the deductions. So what this means is that the net operating loss that's going to be on the return for 2023 is going to be lower than it otherwise would have been if we did not take the full amount of the credit. If we had elected the simplified reduced credits, we wouldn't necessarily have to do this, but since we are taking the full credit, we had to eliminate that double dipping and reduce the deductions, which ultimately reduces the net operating loss that you can take. So you can kind of see how that works. If we had forgotten the negative, you can see the deductions go up, so net operating loss would have been bigger, which we don't want, so we're going to put the negative to artificially lower it. And then go ahead and click OK. Now the second part is actually uploading the support. If we actually go back to that diagnostic again, it says we have to attach a schedule to the tax return that lists the deduction amounts that were reduced. So we had to upload proof that says here are the Section 174 deductions, and they were reduced by the 35K. And then you have to identify where these reductions were made. So normally, let's actually flip over to, let's look at the R&D credit line. There we go. So normally on other tax returns I've seen where it says, are you electing the reduced credit? And it says no, it'll say something like see statement number 5. But it doesn't actually work that way in Proconnect. They make it a little bit difficult. And so what you have to do is manually upload a PDF that shows where you actually reduce the deductions. Now, what I discovered is if you go to statements, and these are the statements that are just related to Form 1120, looking at the other deductions line. And so it says the other deductions, the Section 174 deduction, but then also says the R&D tax credit for 2023, and it shows the negative 35K. It shows the Section 174 being reduced by the tax credit. And so this is sufficient enough. I also received confirmation from the Proconnect support person, the support agent. And so this to me looks like, yeah, you can actually use this as that proof. So what you need to do is download the statement as a separate PDF. So if you go to File Return and then Partial Print to PDF, you can click on Statements under US and then Create PDF. And once you download that, you can go to PDF Attachments under File Return and then Manage PDFs. I've already gone ahead and uploaded that, and I was really descriptive in what I named it. So a research credit statement, and then description of file is R&D tax credits here. You can probably put something a little more. I had like R&D tax credits, deduction, reduction. Maybe that's not the best way to describe it, but something that lets the IRS know that, yep, this is the proof that you're looking for. You'll want to send PDF attachment with federal return, so click yes here. And so what this means is that this statement is going to be sent again, essentially, but I think it is good to have the second amount of support, even though the statement, but there's like a second copy of the statement, but I think it's always good to have this. Now, if we go to check return, you're still going to see that critical diagnostic. Proconnect doesn't really know that you just uploaded a PDF. And one point that I forgot to mention, when you go back to manage PDFs, you do want to fill out where it says link to form. And if we open up this drop down here, we actually see we don't see form 67, 65 on here. That's normally where I'd want to attach it. And that's where I would want to put like C statement XYZ here. But Proconnect doesn't really give you that option. So what I was recommended to do is do form 1120 and then just 0. So the statement will send with the basic form 1120, but we've identified it as the R&D tax credit. Let's do support actually. So make sure to do that. And then flipping back to check return, we can see that doesn't clear out the critical diagnostic because Proconnect doesn't know that we just uploaded something that will clear out this error. But what you can do is actually click ignore. Yes, ignore. And then this won't prevent you from e-filing the return. It's not an e-file critical diagnostic. Like it's not an e-file error. It's just another error that Proconnect just wants to call out to us. So if we refresh, it should be all good. And we can take a look at what this looks like. We have our full credit. We do not want to reduce it. We're doing the payroll tax credit. And then we also attach the statement again, which shows where we're reducing the Section 174 qualified deductions by the R&D tax credit. So with that, thank you so much for watching. Let me know if you have any questions, and we are happy to help. Thank you.